All right, let's just jump right in because what we're talking about today, it's one of those ideas that honestly changes everything. We're going to strip away all the noise, all the indicators, and all the confusion and get right down to the pure logic that's hiding inside every single price chart. Seriously, just let that sink in for a moment. Imagine a world with no more guesswork. No more staring at a chart just frozen by a million different conflicting signals. Imagine just having a clean, clear understanding of what the market is actually trying to do. That's what this is all about. Okay, so let's be honest. For most people, a chart like this is, well, it's just chaos, right? It's a jumble of red and green that just makes you feel anxious or maybe a little too greedy. But what if I told you there's a hidden order in all of that mess? The secret is learning to read its underlying structure, which turns all that noise into a clear, understandable story. And that is the big shift we're going for here. I mean, what if you could stop just reacting to every candle that pops up and instead actually understand the story the market is trying to tell you? It's about getting the why behind all the movement. You know, the easiest way to wrap your head around this is to think of the market as speaking its own language. And that language, it's called market structure. It's not some fancy, complicated tool you have to buy. No, it's the very grammar of price itself. And once you learn it, the charts finally start to make sense. So what does that actually mean? Well, it all comes down to the peaks and valleys on your chart, the highs and the lows. See, those aren't just random wiggles. They are literally the footprints left behind by buyers and sellers, and they tell us exactly who's winning the battle. And at the end of the day, that's the only question that matters, isn't it? Who's in charge? Is it the buyers or the sellers? Well, market structure gives us the answer, and it breaks it down into two basic states of being: an uptrend and a downtrend. And this right here just lays it all out so clearly. When buyers are in control, you get an uptrend. Demand is just overwhelming supply, and what happens? Price starts making a series of higher highs and higher lows. And on the flip side, when sellers are running the show, you get a downtrend. Supply is stronger than demand, and price starts carving out a pattern of lower highs and lower lows. Let's really break down what that looks like. So think of an uptrend like this. Price makes a big push up, creates a new high. Then, naturally, it takes a little breather. It pulls back. But here's the critical part. It doesn't drop all the way back down. It finds support and forms a higher low. That's your proof. That's the signal that buyers are stepping back in, defending their ground, and getting ready to launch another attack to create a new higher high. As long as you see that pattern, buyers are in total control. And you guessed it, a downtrend is just the mirror image. Price takes a dive, creates a low. It tries to rally back, but it just doesn't have the steam. It fails to beat the last high, creating a lower high. And from there, it tumbles again to a new lower low. As long as that keeps happening, there's no question about it. The sellers are the ones calling the shots. Okay, so that's pretty straightforward, right? We know what an uptrend looks like. We know what a downtrend looks like. But now we get to the really good part. This is where it gets powerful. How do we know when the story is about to change? When is that trend about to run out of gas? I mean, that's the question every single one of us wants the answer to, right? How do you spot that reversal before it's obvious to everyone else? How do you get out of a dying trend before you lose your profits? Well, the answer isn't some secret, expensive software. It's right there on the chart for everyone to see. And here it is. It's called a break of structure. You might want to write that down. This is probably the single most important concept in reading price action. It is the very first objective clue that the trend you've been following is starting to fail. It's that moment of weakness when the team in charge starts to fumble the ball. This just makes it crystal clear. So, in a healthy uptrend, you get pullbacks. That's just the market breathing, right? It's totally normal. But the second that price smashes through that last higher low, that last line in the sand that the buyers were supposed to defend, that is a break of structure. That's not a pullback anymore. That, my friends, is a huge red flag, a warning shot that the whole game might be about to change. Okay, a break of structure is huge, but how do you know it's the real deal and not just, a fake out designed to trap you? Well, you need context. You need to zoom out and see the bigger picture. The pros do this by understanding that markets are like those Russian nesting dolls. There are trends happening inside of other, bigger trends. And here's the playbook for how you do that. Think of it like a map. First, you start on a higher time frame, maybe the daily chart. This gives you the main direction, the overall trend. The big, obvious swing points on this chart, That's your external structure. That's the real story. Then you zoom in. You go to a lower time frame, like the 15-minute chart, and you watch the little wiggles, the internal structure. And the magic happens when you find moments where the little story on the lower time frame perfectly lines up with the big story on your main map. That is a high probability trade right there. You know, getting this concept down isn't just about drawing lines on a chart. It actually changes the way you think. It's a massive psychological shift. You go from trying to be a fortune teller to being more like a detective, calmly looking at the evidence. We've all been there, right? Staring at the screen, asking, ugh, should I buy here? Should I sell? That question, it comes from a place of pure uncertainty. It's a guess. It's stressful because you're basically just gambling on what might happen next. But once you understand structure, your whole internal monologue changes. You stop asking what might happen, and you start asking, who is in control right now? Do you feel that difference? One is a guess about the future. The other is an observation of the present. You're just looking at the evidence on the chart. Are buyers making higher lows, or did sellers just break structure? The answer is right in front of you. And that's the transformation. You stop being a predictor and you become an observer. You just let the market tell you what it wants to do. You wait for the structure to show you who's strong and who's weak. And you know what happens? Trading becomes so much calmer because now you're following logic, not just reacting to your own fear and greed. And honestly, this is the coolest part. Once you really see market structure, once it clicks, you can't unsee it. It's like a switch flips in your brain, and from that moment on, every chart you look at on any time frame will look completely different. It's a permanent upgrade. The candles themselves, they're still going to do what they're going to do. The up and down movement doesn't change, but now they'll be speaking to you. Every high, every low, every break of structure is a word and a sentence, telling you a story. The only question is, what's that story going to tell you?